We have a Goldman Sachs report that just came in, and yesterday, in fact, and they have mentioned that gold continues to be their top trade for 2026, and how they believe that there could be a target of $4,900 per ounce that could be seen on gold by December of 2026 as well. Although for oil, they do see oversupply risk and they see Brent averaging around $56 a barrel. They also do see that copper consolidation could continue at around $11,400 per ton. And they're also looking at how battery metals, lithium, nickel, could be hit by, the Chinese supply surge as well. But the single favorite long commodity remains to be gold. And they also see that central banks are expected to buy 70 tons per month even in 2026. So the central bank buying could also continue as well. So looking at all of this, how would you advise somebody who has not yet participated in gold in the sharp run up that we saw in 2025? What should they expect and what should they do?
So I think the central banks across the world are in a big fix because the debt of the Western developed world is continuously soaring, and because of this kind of humongous debt you have, there are no alternative for central banks to reinvest their surplus and their reserves into gold, because I don't think so central banks are going to invest in the cryptocurrency. So the only option which is left for the safety, for hedging themselves up whenever there is a crisis, they need to have more and more gold. Okay, that is the only way out, and that's the reason why even at $4,000, even at $4,200, even at $4,300, central banks are seen buying gold. Okay, so this year's rally was predominantly mainly due to ETF, but even in spite of the ETF, we've seen, I think by the end of the year, numbers have not come, but 800 to 850 tons of gold buying by central banks is quite a big amount. And I don't see any of them coming out right now, and they may increase their allocation, but I believe for next 1 or 2 years, I don't think so that central banks will sell gold. They will no choice but to buy gold. So I am of the view that because the gold silver ratio has come down from 100 to 55 right now, the risk reward ratio is skewed towards gold more. So I am more bullish on gold than silver at this rate. And oil, I have a contrary view. I am bullish on oil also. I believe that the US Permian Basin is exhausting, and the US oil production will go down. The demand growth for the year 2024 was 1 million barrel. In 2025 also it was 1 million barrel. So everywhere there is an electric transition going on, and in spite of that we are able to generate 1% demand growth. And the supply side, if the US if oil prices remain longer at $55 per barrel, I think the supply is going to be facing stiff resistance. So I'm of the view that supply side may respond going forward if price continues to hover around these levels, and China, US will start building their reserves at this price. That is bullish. And third most important reason, that any geopolitical conflict, I mean, there are talks about US and Iran, again Israel and Iran entering. So this kind of scenario can also put an upside in oil. So oil, I'm bullish, can see $65-70 during the year 2026, and gold, my target is at 4650, 4700. Those are the realistic and slightly conservative target for gold.
Okay, let's have a target even for the domestic markets. It is easier for a lot of our viewers to understand that way as well. For domestic markets, gold and silver, by the end of this year 2026, what do you expect?
I think when I take $4,700, that means around 10% upside from here. And in India right now, it is trading at 1,36,000. So it can shot up to around 155, 152, 155 kind of levels in India.
Okay.
And as far as crude is concerned, crude can go up and test levels of 5,800 to 5,900 rupees on Indian exchanges.
And what about silver?
Silver, if I consider 15 to 20% upside, that should come down to roughly around 2 lakh 60